Technical analysis made easy, a starting place for new traders. Have you ever been at a basketball game getting a hot dog and suddenly there's a roar from the crowd? You instantly think to yourself, what if I just missed? Something big has just happened. A price chart may not make noise, but it has another mechanism to let you know there is something happening, something to pay attention to, and that mechanism is bar volume. Volume analysis. While much of technical analysis focuses on price action, volume analysis is almost as important when it comes to understanding market trends. In the futures market, volume refers to the number of contracts traded. You can think of volume as a sort of vote for the direction of the trend a trader has for that market. When a trader places an order to buy, the size of the order might reveal that trader's conviction or confidence in the trade. Analyzing the aggregation of volume in different ways can help you understand what the market participants think about the current trend or price level. Volume study. The basic volume study is shown as a histogram chart, usually underneath a price chart. These bars represent the number of contracts traded for each time interval in that chart. One way to interpret this chart is to compare volume to previous bar's volume. If the volume is increasing, that shows that the trend could be reflective of where the participants think the market should go, regardless of if the move is up or down. If there is a price move of weakening volume, this might indicate a false move, and you might anticipate a return to the previous trend. You can also use a moving average of volume as your basis for comparison. If a price move occurs with higher than average volume, that move could be considered legitimate, whereas less than average volume indicates a move that doesn't have buy-in from traders or investors. The volume smile. The volume histogram may look different on an intraday chart than one on a historical chart. On an intraday chart, volume tends to increase at the traditional floor open. These times go back to when the markets traded only in the pits of an exchange. For this reason, you might see that the highest volume happens at the beginning and end of the traditional floor hours for a contract. This leads to a pattern that looks like a smile. You can use this to your advantage towards the end of the floor session, knowing that volume should increase as market participants might want to exit positions they entered at the start of regular trading hours. This increased movement could propel the market in either direction, without an obvious news-driven event occurring. Volume profile. Another way you can look at volume is through the filter of price. The volume profile study displays a histogram chart with the price axis acting as the base. The volume profile is created by recording how many contracts traded at a certain price or price range. As the trading day unfolds, you get a sense of which price levels had the most activity, which can be used to identify areas of support and resistance, or possible levels that the market might return to. This is especially useful for the futures trader on an intraday chart. The shape of the profile chart can be compared to a bell curve, with the idea that 68 to 70% of all trades happen around the most traded price area. You can use this information to see if the current price is trading within that range. If it isn't, it's possible that price will revert to that area, giving you a sense of where the market could go. Volume-weighted average price. Volume-weighted average price, or VWAP as it is known, combines volume and price information to create a set of lines that can be useful in identifying areas of support and resistance. VWAP is calculated by multiplying price by volume for each trade, summing those results up, and dividing by the number of contracts traded. This results in a value that gives more weight to the trades that are bigger than a 1 or 2 lot trade. VWAP can be used as support or resistance, and even as a magnet that the market tries to return to during the trading day. You can also display multiple standard deviation bands from the VWAP, using them as support and resistance throughout the day. Because these lines are tied to the VWAP, they are dynamic, so trading between VWAP bands doesn't always result in trades that occur at consistent prices. Fortunately, you can attach orders to VWAP bands, such that if a VWAP band changes price, and it will, your order will change price with that band. Properly used, volume can help understand several key ideas about the market. A standard volume study displays the conviction of market participants as a whole. Volume profile shows where buyers and sellers agree the most where price should be, and VWAP helps to understand if price is strong or weak compared to the true average for the day. Once you have chosen the volume studies for the proper time interval charts you use, you can complement them with other types of indicators, like trend, momentum, or volatility indicators. Please check out the syllabus for videos explaining these valuable concepts.